If you ever stared at a financial chart and just felt completely lost, you are not alone. We're often told that trading is all about complex math and secret formulas. But what if the real secret isn't in some complicated code, but in the human story happening right behind the numbers? Today, we're diving into a totally different way to see the markets, one that finally explains why so many of the traditional methods just don't work.
So let's just start with the big, frustrating question that drives everyone nuts, right? Why do over 90% of traders lose money? You study, you learn the patterns, you follow the rules, but the market does the exact opposite of what you expect. So is it rigged, or is there something fundamentally wrong with how we're all being taught to read it?
Well, here's a pretty radical idea. The problem isn't you. It's not your fault, it's the education itself. You see, most trading courses are built on this cycle of flawed, superficial rules that basically set traders up to fail from day one. They teach you what to memorize, but they never teach you how to understand.
And this quote just nails it, perfectly captures that whole experience. Traders get handed these simplistic tools, draw a trend line here, watch for this indicator, and they're told that's the key to the kingdom. But then you get into the real world, and these cookie-cutter rules just fall apart, leading to nothing but confusion and constant losses.
I mean, does any of this look familiar? This endless cycle of trying to memorize a million candlestick patterns, trusting indicators that are always a step behind the actual price, getting completely contradictory advice from different gurus, and at the end of the day, just feeling totally lost? This isn't really a trading strategy, it's more like a recipe for burnout. So how do you break this crazy cycle? It all starts with a huge fundamental shift in your mindset. We need to stop trying to memorize this chaotic mess of rules and start learning to understand the simple story the market is telling us every single moment of every day.
And the difference? Well, it's night and day. The old way is all about memorizing external, rigid rules. But the new way? It's about understanding why the price is behaving the way it is by reading the human psychology that's driving it. It's about grasping the market's overall narrative, not just trying to memorize its footnotes.
And here it is, the big idea, right here. The market is not some complex computer code that you have to crack. It's a messy, emotional, and honestly, a pretty predictable story of collective human behavior. A story of hope, fear, and greed, written one transaction at a time. And once you see this, everything changes. Okay, to make this really click, let's step away from the charts for just a second. We're going to use a simple, everyday analogy that reveals the engine of the market, plain old human nature when it's put under pressure. Imagine you buy a house for $1 million, not to live in, but as an investment. But then, right after you buy, the market turns. Your investment is suddenly worth $50,000 less. That feeling in the pit of your stomach, that mix of fear and hope, that is the single most important force in any market. So what do you do next? Well, broadly speaking, people have three basic reactions. First, you've got the optimist. They're confident the price will bounce back, so they hold. Then there's the break-even hopeful. This person is anxious. They're just praying to get their money back, and that creates a wall of sellers right at their entry price. And finally, you have the fearful seller. They just panic and sell at a loss to stop the bleeding. Sound familiar at all? And that right there, that is the light bulb moment. These three reactions, multiplied by millions of people around the world, are what create every single pattern, every swing, and every level you see on a chart. The chart is just a visual record of mass human psychology. So a trader's job isn't to be a mathematician, it's to be a hunter, anticipating and acting on these predictable human behaviors. So how does all this human drama actually play out on a chart? Well, this collective behavior pushes the market into one of two fundamental states at all times: a state of agreement or a state of disagreement.
The first state is a range. You can think of this as a temporary truce. Buyers and sellers have reached a ceasefire. They generally agree on what an asset is worth, so the price just bounces around sideways in a pretty predictable zone. The market is in balance.
But then, something changes. News might hit, or fear takes over, and that agreement completely shatters. This creates the second state, a trend. A trend is simply a period of disagreement. The market is imbalanced, and it's actively searching for a new price level where buyers and sellers can find some common ground again.
Okay, so we have range and trend, agreement and disagreement. Simple enough, right? But we can get even more specific. Think of these two states as the foundation of a new, much simpler language for reading the market story.
So a range, that period of agreement, can take different forms. A tight range shows strong agreement on price. A broad range, though, signals way more uncertainty. Understanding the difference tells you a whole lot about the market's conviction.
And trends, those periods of disagreement, also have their own distinct flavors. A spike is an explosive, one-sided move driven by sheer panic or euphoria. A channel is more of a gradual, negotiated argument between buyers and sellers as the price moves. Each one tells a completely different story about the intensity of that disagreement.
And these are the building blocks. That's it. With just these few concepts, you can deconstruct any chart. Instead of seeing random noise, you start to see the story. Is the market in agreement or disagreement? Is that agreement tight or broad? Is the argument a sudden spike or a slow channel? You're no longer memorizing, you're reading. And this brings us right back to our main idea. When you look at a chart, what do you see now? Is it a complex code that only a computer can solve? Or is it what it has always been? A deeply human story of fear and hope, of agreement and disagreement that you can actually learn to read? The answer? Well, it changes everything.